Tau Investment Management is a turnaround and growth equity firm. We are raising and deploying currently $1 billion to focus on the garment industry. We fix supply chains in a nutshell. We look for industries that are at inflection points where investment and know-how are needed to turn around vendors to make them more sustainable, to make them more productive, to make them more efficient, to make the vendors of the future that are being demanded by certain brands in certain industries. In the apparel industry, the need was broadly evident to the brands well before the tragedies at Tazreen and Rana Plaza, but those two tragedies made the need evident for the world. The cost of doing business in an unsustainable way has been revealed to be more costly than doing business in a sustainable way. And by that I mean the turnover rate, for example, in Bangladesh of workers that are leaving their factories to go across the road for a few taka more. On average, the monthly rate is between 8 and 12%. So the best workers leave, and this is in some of the better factories, so the best workers leave as soon as they have the basic training. So all of that is, the training for the most part is sunk cost. And if they're leaving, then you're not getting the benefits. Their value per minute, when it goes up, is enjoyed by one of your competitors. That's enormously inefficient. So why not make workplaces where people want to work? It's just a basic element of what I believe should be efficient market capitalism, that in a free and flexible labor market, you want to make attractive jobs where workers feel they have some ownership over the products of their labor. It's nuts and bolts economics that couples with the math and makes for a business proposition that whether you're talking to factory owners, whether you're talking to brands, whether you're talking to consumers, and certainly whether you're talking to workers, they get it. For the moment, we're focused on the apparel and garment industries, and we're theater agnostic within that. We'll go to any country that has opportunities, companies of scale, suppliers of scale. These are all brownfields investments, so we look for existing companies that have problems, challenges that need to be addressed, that need capital to address them. But critically, we look for good management that wants to do the right thing, that wants to be one of the suppliers that make the cut as the brands increasingly consolidate. I should say Tau 2.0, 3.0, we'll look at other industries, potentially electronics manufacturing, agriculture, fishing. There are thankfully, an increasing number of industries that are ready for that change, that are ready for that investment. My background for the last 15 years was as an investigative journalist focusing on slavery, human trafficking, and I wound up focusing on slavery and human trafficking in corporate supply chains. And what I found, writing for Bloomberg Business Week, writing for Time magazine, but particularly when the stories would go out over Bloomberg terminals, I would find slavery in discrete areas, say 12 to 200 miles off the coast of New Zealand on foreign charter vessels, and I would connect the fish that they were catching to retailers, wholesalers, restaurants that sold to U.S. consumers. And something remarkable happened when you made that supply chain bright and shining. The buyers changed their vendors. The buyers canceled their contracts. There was a market shift. Money was lost on the part of the companies that weren't doing the right thing, and contracts were gained on the part of the companies that were doing the right thing. So there's an obvious market incentive for us, but really supersedes us. What we're doing is accelerating the inevitable in certain industries. Certain industries are going to change. Just as Tesla is accelerating the inevitable in the car industry, where because of the destruction wrought by carbon fuels, because of the unsustainable way that cars have been produced over the last 100 years, there was inevitably going to be change. Tesla just had the foresight to get there first and to build a sexy car that sold to consumers. So we're essentially doing the same thing in the garment industry. We're reforming it in a way that desperately needs to happen. So our method is equity, turnaround and growth equity. We look primarily for companies that are willing to be transparent, wholly transparent to us. And in many cases, we go in and find out what's going on in their supply chains in fairly short order to a higher degree than ownership of those factory groups knows. Not all that is immediately broadcast. We want to know exactly what's going on in our portfolio companies because we want to fix our portfolio companies. We want them to be the suppliers of the future. A byproduct of what we do certainly is transparency, is what I have called democratizing transparency, aggressive transparency, not only in the companies that we're transforming, but in their immediate competitors. I think the message for so many of the factory owner, the large factory group owners, is the same as the message for the retailers. And it is going to be true whether or not Tao investment is involved or not. But they may not have been interested in transparency in the past, but transparency increasingly is interested in them. And that is going to be a transformational force. Again, all that we're doing is accelerating the inevitable, certainly accelerating the transparency, but also investing to make those companies that are not only transparent but also better, more efficient, more environmentally friendly, using less resources in terms of energy, better making use of their human resources, making those companies the ones that survive the cut after sunlight is shone increasingly on the industry. That's an interesting question. No, it's something that we deal with all the time because we have a significant amount of information that we gather, and you know, a lot of the stuff that I do as the head of the proprietary research desk, I have to be very careful about protecting sources and methods. If for no other reason, then there's a lot of money at stake here. We're dealing with industries that are in areas of the world where the rule of law can be tenuous at best, and I want to keep people safe that are helping us understand these industries. So, you know, I think we deal with, the short answer is we deal with those on an ad hoc basis. We frankly look always with an eye to turning around what has historically been a race to the bottom and making it a race to the top. Transparency is a key tool in that. And so if those companies that are doing the wrong thing persist in doing the wrong thing, at the very least, the buyers should be aware. And what we're seeing, very hearteningly, is that there are stutter-steps with some buyers. Generally speaking, there's pretty aggressive moves to fix suppliers, either fix suppliers or drop suppliers. Walmart's Red List, for example, is an extraordinarily powerful, if controversial, tool in Bangladesh. It's a list of factory groups that Walmart will not buy from. And short of that, there's sort of an orange list, as they call it, that are companies under review. And in neither of those lists are lists that you want to be on if you're a factory owner. Because if you go on the list, it's on Walmart's website. Everybody sees it. And if you can't get off that in short order by investing to transform, by bringing in know-how, by changing your building structure, fixing your fire escapes, whatever it is that gets you off that list, if you can't get off that in short form, you're going to go out of business in 1 or 2 cycles. And that, frankly, helps us. You know, impact investing is an interesting term, and it's one that we don't wear automatically. The impact from us comes because we're showing that it's highly profitable to do business in a different way. Typically, impact investing, of course, as it's been used, covers a whole range of techniques and practices. We believe that what we're doing is turnaround and growth equity. It's that simple. It's not, the impact is certainly part of the value that we create. Part of the way that we make these portfolio companies more valuable is by making them more socially, environmentally friendly, better on governance, better on all sustainability metrics. But first and foremost, we're turning $100 million companies into billion-dollar companies. And that involves a whole range of techniques, including roll-ups, including consolidations, including expansion of existing operations. And it includes, you know, critically bundling demand and responding in an industry where the buyers know what they want. They don't want 500 unaccountable suppliers. They want 50 or 10 that are really good, really big, really clean, treat their workers well, don't destroy the environment, and produce products that are high quality, meeting their requirements for cost and lead time. It's that simple. It's just that there's $1 billion at stake that we believe is a fair and orchestrated bet. You know, for the best business practices and against some of the worst problems that capitalism has wrought. It all depends. It all depends. Industry by industry, you're going to get different practices that work in different systems. In the garment industry, however, what I've seen and what the buyers have seen, what the sourcing directors have seen, what the procurement VPs have seen, you know, the hard men and women that go and do costing discussions, what they've seen, the worst practices take place in what they used to call homework, production in you know, the back of somebody's house, doing probably one sew or one cut, many times using children, or in these, you know, 2- and 3-room sweatshops, which I've been in. I've embedded in raids from the Brazilian labor ministry around Sao Paulo and found labels that are sold in the West being produced by children in these deplorable conditions where they wind up, you know, contracting tuberculosis. So, at the same time, not all big factories are good. But if it's all under one roof, and if we can guide the investment, and if we can guide the transformation, and we can continue to watch through the transparency platform, it's we believe the best bet to transform the industry as a whole.